Swing trading is all about riding the waves of market trends. It's a strategy that allows traders to capitalize on short to medium-term price movements, typically holding positions for a few days to several weeks. The goal? To catch those sweet price swings that happen in the market. Imagine this. A trader spots a stock that's been trending upwards for a while. They jump in, buy at a lower price, and hold on as the stock climbs. Once it reaches a peak, they sell, pocketing the profits. It's like surfing. Timing is everything. The key is to identify those trends early and act quickly. So how does one become a successful swing trader? First, it's essential to analyze charts and patterns. Candlestick charts are a swing trader's best friend. They provide visual cues about price movements and help traders spot potential reversals. Look for patterns like head and shoulders, double tops, or flags. These can signal when to enter or exit a trade. Next up is understanding support and resistance levels. Support is where a stock tends to stop falling and may bounce back up, while resistance is where it struggles to rise further. Knowing these levels helps traders make informed decisions about when to buy or sell. A breakout above resistance can signal a buying opportunity, while a drop below support may indicate it's time to sell. Risk management is another crucial aspect of swing trading. It's vital to set stop-loss orders to limit potential losses. This means deciding beforehand how much loss is acceptable and sticking to it. It's all about protecting that hard-earned capital while still allowing for potential gains. Swing traders also need to stay updated on market news and events. Economic reports, earnings announcements, and geopolitical events can all impact stock prices. Being aware of these factors can help traders anticipate market movements and adjust their strategies accordingly. Finally, patience is key. Swing trading isn't about making quick bucks overnight. It's a strategy that requires discipline and a clear plan. Traders should stick to their strategies, avoid emotional decisions, and learn from their experiences. In summary, swing trading is an exciting way to capitalize on market trends. By analyzing charts, understanding support and resistance, managing risks, staying informed, and exercising patience, traders can navigate the market waves successfully. So grab that surfboard, catch those trends, and ride the waves of the stock market